This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro. So today what I want to do, I'm back from ChartCon and I had a discussion on there where I was trying to explain how I look at multiple time frames. And typically what I like to do is use two time frames side by side. But I want to give you a little bit more of a glimpse because I got a question from someone a few weeks ago asking me like, what about the higher time frame? If I'm looking to trade off of a weekly chart, what about the monthly? Or if I'm on a daily chart, what about the weekly? Because typically you can look at just a daily and an hourly and kind of ignore the weekly at times, but I don't ever do that. Okay. What I like to do is if I know I'm trading off the daily time frame, I want to look up and then I want to go down. Okay. So looking up means a higher time frame or a longer time frame, which is a weekly. And looking down would be going to a smaller time frame like an hourly for the timing. So what I'm actually doing, if I'm trading off a daily chart and I have a trade pattern off the daily chart, the weekly will often be able to help me define the trade. It'll give me the targets. If there's resistance in place, it'll show up on the weekly crystal clear. So that's what we want to do. I'm going to show you how I use three time frames and in what way that I do it in terms of the timing. So let's first look at this chart. What I want to show here is, so I've got the 18 MA. So this is the upper time frame. So keep this in mind. So if I'm on a weekly chart and I've got a pullback trade, let's say, all right, I'm looking to play a pullback trade for a move to the upside. And I want to have some idea of what's going on the next time frame up, which would be the monthly. Okay, so I want to make sure that I'm avoiding these two things on the monthly chart. And I'm going to show you examples of this. The first thing is we don't want to put on a trade when if the weekly is here and we're giving a signal right underneath a declining 18-month line. Right. I mean, I'm getting a signal on the higher time frame on the middle time frame in this case, and I've got the higher time frame or the upper time frame showing resistance, trend resistance based on the 18 MA. The other way where I want to avoid, so it's essentially what I'm trying to find is enough room. I want to make sure there's enough room to that next time frame's moving average. That's basically my target, and it's defining. So the upper time frame is essentially giving me a target area for where I'm going to look to get out. Now, the other thing that you want to avoid is if you see a signal, let's say you've got a weekly chart, again, that's up in here, giving you a signal after a big run on the monthly, that's not so great. I mean, that's not really what we're looking for. It's okay if this is showing a strong trend, but if it's showing signs where it's kind of climaxed or had some really big bars, you want to be really careful once you get stretched away from the 18-month line from taking any new signals there. So let's go ahead and look at this. So I've got Marvel up. And the first example, and actually both of these trades are going to be weekly trades. I'm sorry, where the weekly is the upper time frame. All right, and the daily is your essentially trade signal time frame, and then the hourly is going to be the trigger time frame. All right, so I've got a pattern that's developing on a daily chart. Let's just go back here. You see this pullback here with good momentum confirmation, good MACD confirmation, and I've pulled back. Now we'll just ignore this big red bar. That might have prevented you from thinking about taking this trade, but let's just assume this was an orderly pullback. The problem I have with this trade isn't even the pullback, because I'm not even going to look at this. The problem is, look at where it happened. It had already made a consolidation breakout move and then an extended move with two pretty big weekly bars, got stretched away from the 18. This was pretty far. This was over 50. I mean, I'm not really looking to play this when it's that extended away on that upper time frame, right? Okay, this is the traded time frame. This is the trigger time frame. And then we go up one. So if I know I'm looking to play the daily chart, I go up one and then I go down one. All right, and that's why I have it set up this way. Use the monthly and the weekly together. I don't, you can go up from a monthly and look at the quarterly, but that's not as important. If you use these two time frames together, that's pretty much all you need. But if I'm looking at a weekly trade, and just to give you an idea, so if I'm looking at a weekly, I'm basically I'm looking for a trade that I think could last months. All right. If I'm on a weekly trade, I'm looking for something that could last months. If I'm looking at a daily trade, a daily setup, I'm looking at something that could last weeks. Okay. And then if I'm looking at an hourly trade, I'm looking at something that could last days. All right. So, and then obviously if I'm looking at a monthly trade, I'm looking at something that could last years. So if we get a successful signal, you should think weekly is going to last months. If you get a successful signal on the daily, you should think it lasts weeks. And if you get a successful signal on the hourly, it should last multiple days. All right, that's how you want to think. So if someone says, what do you think of the market coming up over the next, 4 to 6 months? Well, this is my main time frame here. My weekly is my main time frame, and then I'm going to look up and I'm going to look down to help with that if I'm looking to do a trade. But it does so. And if someone says, well, what do you think about, say, between now and what's today's date? October 10th. So say now between the end of October, early November. Well, I'm going to use this as my main time frame. And then I'm going to look at this to help the weekly chart to help confirm or refute what I'm seeing on the daily. And then I'm going to use the hourly to help with any timing in that way. So this is a good way to think. If you're looking at longer term trades, obviously you want to be sticking with the monthly and then helping the timing on the weekly. But know what time frame you're trying to play. I mean, if you're looking to play, so just to give you an idea, like if you're looking to play something over the next 3 to 6 months and you're using an hourly trigger and timing it and the risk is off the hourly, you're mixing your time frames. There's something wrong with the approach. Now, you could use this to time the entry, but you got to be really careful about trailing a stop off of an hourly. If you're trying to play something for 3 months and you think you're going to be able to do it off the hourly, I mean, you're going to get stopped out all the time. You're never going to see a trade through. So be real careful about mixing your time frames and shortening them when you're trying to play something longer. So if you know you've got something that looks really good on the monthly, you got a setup on the weekly, and you're timing it off the daily, be real careful about creating minuscule risk off the hourly, because it sounds so great using really small risk, but seeing the trade through will be very difficult. Okay, so I wanted to make sure I covered that. Now, so I've covered the one where we're extended above the 18. Now let's look at the other trade. So let's look at this pattern right here on the weekly. We've gotten extended. Well, I'm sorry. Let's do this. Let's look at the signal on the daily, because that's really the time frame that is set up. So we get this move to the downside and we get a little stretched away from the weekly 18. We get daily 18. We get stretched away from the daily MACD 0 line. This isn't really giving us any feedback that would signal I want to play this to the upside, but we did have RSI 5 give a divergence here as this was making lower. I'm not going to pull that up because I want to save time here. I'm already at 7 minutes on this video. So just trust me when I say that this was an RSI 5 divergence. Now, I'm not going to play this off this low. All right, typically, even though if you look, we had MACD divergence there, it didn't really have a good ADX look, so I probably wouldn't have played that here. However, look at what happened after. This is the trade that I like. We have some mini divergence develop, and we get a move inside a range because we're still we're trying to make a move off a low, and look at how we're walking along the 18 and forming a pinch. Okay, so I would play this as a trading move. We don't have ADX confirmation. I'm not looking for a monster trade. I know when I do a pinch play, I'm usually looking for something in the 3 to 6 day range. Sometimes it's only 2 to 4 days, but something in that 3 to 6 day range. But what I'll do is if I'm looking at this time frame and saying, you know what, I like this trade, and look at the way this was setting up on the hourly. I mean, this was a thing of beauty here. All right, see how this was a zero line reversal and we had low ADX. Red couldn't get the ADX to move at all. We know we were looking for an entry in here. Pretty attractive pattern from that standpoint. So I've got this taking place, this kind of walking along the 18, and we've got the pinch developed. So at this point in time, we're down in this region here, and I know my target is the 18. I'm looking to play a move to the 18. So if I'm looking at that, I know the somewhere in the 54, maybe 55 is my target area. And I'll always play it a little conservatively because I know if it takes a little bit of time, this line's going to keep dropping. So, and if it does drop, like if the trade takes a little bit too much time and it does drop, then you end up taking a smaller target, and that's okay. So be fluid with these. If this is dropping while you have the trade on, you have to lower your target. But I think the way this played out and the way it triggered, you would have had about a 54 target, and what it did was it reached, it hit 54. That was basically right at the declining 18. It ended up penetrating it a little bit after that. It pulled back and then went again, but that's okay. I mean, we just want to play this first leg. Just take the money and run. Hit and run trading when you're playing this type of a move. When you don't have ADX confirmation, you can take trades off the MACD signals. All right, but just be a little bit more trading oriented. It's definitely a swing trade with an end in mind, and use this as your target area. So that's the way I would trade and do trade when I'm playing, especially if I'm playing like a counter trend to the higher time frame. Yeah, this is a reversion trade on the weekly. It's actually a range trade on the daily because we found a bottom after making a divergence. And we're still in a range, and we have a little bit of room to rally up inside this range. If you notice, it never took out the upper end of this resistance, so it stayed in a range and came back down to the lower end. Now it looks like it's breaking down again. But when you're in these ranges, you can play these ranges, but you have to use the higher time frame to give you your targets. So I hope this makes sense. Just to make sure I'm giving you what I'm looking for or what I'm trying to avoid on the upper time frame. I don't want to buy on a daily chart if the weekly is really extended and the MACD is really extended from the zero line, and we've got a signal showing up on the smaller time frame, but I'm stretched away. I don't like that trade. All right, and then I also don't want to do a trade here on the daily when I know I'd have a little bit of room when I hit the 18 week. I want to make sure I have enough room to make it make sense on a risk reward basis. All right, so keep those things in mind when you're putting these trades on. We're going to have an environment that I think we're going to catch some kind of a low in here at some point. And what I think is going to develop is a range. I think we're going to end up forming some kind of a sloppy kind of range. And if you're going to trade, you're going to need to understand these concepts, because it's not like what we had. Look at this move trending up. I mean, you can look at the weekly chart. It was nothing but up. You didn't have to worry about resistance because everything was trending to the upside. We're going to have a lot of cross currents in place, and you're going to need to know how to play targets. Even though this looks like a nice play, even like this pullback here, you got to know that you're dealing with resistance on the higher time frame. Not as good a trade, in my opinion. Yeah, it went up a little bit, but it got hit pretty hard because it hit the resistance on the higher time frame. All right, so go ahead and keep those things in mind, and post any questions or comments, and we'll see you next time. Thanks.